The year is 1987 and the month is October. We just suffered the worst crash of all time, the Black Monday. The question is, could something like this happen in 2023? Well, there are some stats that are looking eerily similar. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos together. Today, we talk about the sell signs that people are looking at in the markets. Do we need to be paying attention to them, or should we be focused on the bullish side? With 1, 2, 3, 4 days down, markets are starting to get a little bit oversold. But with Russell 2000 showing us the way possibly is down moving forward and semiconductors coming to an important level, we've got to focus on market breadth. And meanwhile, it's not looking very good. Well, welcome back, everybody, to the special weekend edition of the Markets Around the World. We discuss macro, lead indicators, and the hottest charts together. If you like anything to do with markets, remember to subscribe, smash that alert button, and join us for the Monday Open. It's going to be a wild week. So we know that there were trillions of dollars options expiring, but this is what Friday looked like. It was a sell-off across the board as we saw many options close directly into the morning, moving maximum pain right down to almost levels where it actually closed at the end of the week. More on that later on, but let's discuss Tesla, down almost 16% for the week, while Netflix earnings were showing us a little bit more green. It seems to be a decent earnings season, but not amazing, and concerns around the world are starting to put pressure on the best sector in the markets, being semiconductors. Let's have a look at the eerily and possibly spookily similar times in 1987 to where we are now. Now, of course, these are most likely just interesting history tidbits, but you can see here the NASDAQ versus the Dow in 1987, where we are now and what happened next. Now, I had a look and dig through some of the data for the worst months of the year, but more importantly, the worst flash crashes. And it turns out 3 of them are actually in October. There was Black Monday, which is obviously October 19th, 1987. And then there were 2 others focused on the end of October. Now, not to say they're going to happen, but of course, some interesting stats nonetheless. Let's talk about the reality of where we faced or what we are faced with in the markets right now. Russell 2000 is showing us something that's very strange about this market. The cumulative AD line, that is basically how we're seeing the advanced decline of stocks, is starting to look exactly similar to what we saw before 2008, 2009. The only other period it ever happened was the 1999 to 2000 bubble. And in both situations, when the Russell 2000 did so badly, we led into a pretty tough time for markets. Will it be the same? Well, let's have a look at some interesting things here. Of course, yields continue to be a problem. Have a look at the UK 30-year yields, a new high, and this actually marks the highest point since 1998 for UK 30-year yields. Meanwhile, I was having a look over on Twitter X, and I saw this chart here from Holger, and it's just phenomenally weird. Greece 10-year yields are paying less now than US 10-year yields. Yes, you heard that right. Greece 10-year yields are paying less than US 10-year yields. I remember back in the past when you would have thought that is absolutely impossible. And the reason I want to bring it into this special weekend edition of the videos is because you have to expect things that are absolutely obscene in markets sometimes that you may not think are possible at all. So what are the actual odds that we focused on a 1987 style crash? Well, of course, it's 1 in 5, I believe, over the next 20 to 30 years we could suffer such a crash. So I wouldn't worry too much about it. But what I would say is that it is very imperative that we think about these risks always in markets. With the rise of zero DTEs and, of course, everybody starting to own stocks, take a look at this chart. 58% of all American households now hold stocks in their account, much more than it was back in 1987. The reality becomes clear that something weird could happen at any time, and of course it would actually affect most of us out there. US IG Corp Index is also showing us some weird similarities with certain other periods. Now you'll notice here that we actually had a difference in yield versus spread on bonds, and you can see the difference here lasted for quite some time, leading into a very serious situation. Something we will be looking at, because when we get these types of spread differentials, there is usually something wrong in the economy, and we'll focus on that moving forward, so make sure to subscribe and smash that like button. Before we get into the charts, before we get into the statistics of what most likely is going to happen for the next couple of weeks, I want to talk about earnings season, because this week is massive. Why is it huge? Well, we know it's all about big tech. Microsoft comes out Tuesday after the close. Then we've got Amazon, we've got Meta, and obviously many, many others coming through. This is the week where we see what technology has really done and what it's going to do moving forward. And of course, with most of the stocks realistically, or most of the stock market realistically being the Magnificent Seven, there are a lot of things to be wanting to watch out for. Take a look at Meta. Historically, maybe not this much volatility in the options. Have a look at this. It's a plus minus 8% overall. So we have a plus minus 8% move. We've got Google with a plus minus 6. So remember, as you're a trader or an investor, you're looking at some pretty large moves coming through these earnings seasons. What about direction? Well, what do the retail traders think? I'm very interested in seeing this week's report on this. And of course, we'll update you when it happens. But everyone's split 1/3 of the way. 1/3 are bullish, 1/3 are neutral and have no idea what's going on, and 1/3 are bearish. So what a perfect time to confuse everyone. Well, bullish percent index, which is something we're focused on in terms of the rally, hasn't made a new low yet, but it's starting to look a little bit negative. For bulls to come around, this is around the right area that they need to do it. According to recent pre-election years, we bottom on October 19th, which is just gone, and literally showing us again that we tend to lead into a fairly decent November and December rally. Will that happen again this year? Well, the odds are that we continue a little bit of chop, and actually while we might bottom around this period in time, we tend to chop all the way till mid-November. Let's have a look at a couple of other stats here. Here's what tends to happen. You can see pre-election years have a slightly different bottoming period. Sometimes it leads into the next week, which seems to be what is happening right now. But this is the week that will really define, I think, the market from a potential November to December rally, or just a really, really bad time where everything's starting to look really bad across the board. We've got some updates here as well. When we've had January to October positives and August to October is negative, it turns out that the stats start to change a little bit. Instead of just a 100% win rate, we tend to see a 15 win, 3 loss type of scenario. So, well, will we get a bullish end to the year? The stats are still in your favor, but they're getting worse than they were only a week ago. And that's thanks to really what happened during this maximum pain week. Pre-election years, November since 1950, you can see November tends to be still a positive month. And I want to bring this chart up because, of course, gold has been the diamond, or the gold in the rough, I guess, in this case, with that huge short squeeze that we've started to see. And we had that a week ago. Gold put on some massive trades over the last week. And we know it leads into usually a multi-month trade, which can go upwards of around 30% in move. Previous times we've seen this 30, 32%, and 26% gains. Let's take a look at the under the hood. What big transactions were going through this week? There was a huge late print on the Russell 2000, which probably was a mixture of sell going through because, of course, it happened during the session and then it posted as a late print or a late kind of advice to us that it had happened. That was a massive trade going through the Russell, again, near the lows. We saw the bear funds. This is the Direxon Daily S&P 500 Bear Fund 3X. That actually showed us resistance. So we basically saw a possible take profit on bearish moves, which makes sense based on where we are in the markets. And we'll look at the structure very, very soon. And then we had some other things here, such as United States Oil Fund posting a big trade last week and so far turning around. We've speculated that we may have just seen the high in oil. And although that is not popular opinion, we'll take a look at the charts on how to figure it out later on. We also question what's going on with Google. One of the biggest trades of the year went through. Since that point, negative 3% or $3 lower on Google. So some large moves starting to come off some of these big sells or potentially sells at these highs. Let's have a look at the Friday options expiration, and maximum pain did not come through, but it kind of did. If you actually looked at maximum pain, maybe this is a good little word of warning with it, in the morning open, you would have noticed it dropped significantly. Tons of options were basically closed, and we saw a huge change in maximum pain. I think it dropped something like 9 points in the morning, which is massive for the SPY, and it came straight back down. So it actually closed closer to where everybody was making a lot of money when it comes to the options. Let's also have a look at these unusual activities, because there were almost 47 million options opened. 51% puts, 49% calls, so obviously slightly in the put favor. But we did still see a lot of calls being opened across the board. Where were some of the trades that I thought were interesting? The first one is, of course, the Russell 2000 continues to get way more puts than calls. Have a look at the difference in numbers here. The S&P 500 was putting in 1.5 million more overall puts. So you can get a lot more puts there that's going on. And Tesla was actually even on both puts and calls, which is unusual. Usually, as we see, there are usually a lot more calls than the put side. Heaps and heaps and heaps of unusual activity. Solar was the most beaten down market. Enphase got absolutely obliterated through the session, gave up its low. And the solar market is just in a suffering period of time. Let's move over to the charts now together and have a look at the VVIX. The volatility of the volatility was rising. And of course, this is something we're looking at. This week, you'll want to look at this. You'll want to look at the volatility in the bonds market. And of course, you'll want to be marking out things such as 25 VIX plus, because if that happens, usually we've seen a capitulation low or we're getting close to it. So yeah, the VIX was higher, the volatility of the volatility is higher, and the MOVE index remains incredibly elevated. It looks like they're back in town. US 10-year did drop from the highs after we've got now concerns about the market completely, and we have no change of trend on any of the long yields. Obviously, 2-year lost the most. 2 days of selling here on the 2-year. We went from 5.25 to 5% as effectively concerns about the whole economy are starting to come through. Treasuries are just seeing so much volume. Have a look at this volume. It's a new record down here on the lows in the previous session, and we continue to remain elevated. Someone is buying, someone is selling, but we have no turn event. And of course, we'll be looking very closely at market highs such as 88.35 in the future to kind of define that we may have a low in treasuries. At this stage, the sellers are still in command and it can go lower. Never bet against what is possible there unless you have a replicatable system with risk parameters. Let's move over to copper. Nothing good. It doesn't look good. It doesn't look like it's breaking high. The trend is still down and it's still putting pressure on this huge demand zone. We'll move over to equal weighted market. New low, not so good. Obviously coming into these lows here. Marks a good point for the bears to be confident in what they're seeing. We saw the Fed basically did take away a bunch of injection from the markets. You can see here a huge move in the liquidity curves for both the US and the world, which are these two lines here. And that kind of was, similar to what happened with the market with 4 days off and sell. More on the key levels of that very, very soon. Dow Jones Transportation Average Index took a new low last week, and then the rest of the market followed so far. If this remains low, that is bad. We can mark out some highs in the future that we'll want to be focused on very cleanly for a proper recovery. But yeah, Dow Jones Transportation Average is bad and home builders are even worse. And this is telling you there's something wrong. Remember, home builders led us out of the problem last time. June was their low. October was their recovery low, higher low, and everything was looking pretty good. This time around, there is nothing to tell us just yet that home builders have fully recovered or are showing recovery. So could it be some giant double top? Are we seeing signs of problems? I would say yes. And there are a couple of things that you can point through here. Things like the trend lines, they're dead, they're gone. Look at that weekly, it was horrible. And then of course this week turned out to be even worse. Volume is high, home builders are in trouble there. Let's move over to the US dollar, still in distribution mode, at least that's what we're guessing. We are neutral on the dollar at this stage. I don't know whether it's accumulation is going up or distribution is going down. What I do know is this is an incredibly important level. If you had to say, what do you guess? My guess is the dollar will fall from this level. And of course, it will continue to be one of those points where we're looking for a wyckoff at this point in the dollar index, and more to that to come. What about gold? Really strong move from gold last week. Incredible week-on-week action here from the short squeeze. Someone's massively trapped down here in shorts, and they're getting leveraged out. We did hit a high, so of course, this is a resistance. I would say that we expect some type of pullback into move, but it looks like it's in a multi-month potential move here for gold. And we've seen some of the statistics. When trapped shorts get in, it can be a pretty good turn event for markets. Gold on the stocks, well, there are some profit takers here. Why wouldn't you? What a great resistance high or supply high. and of course a critical zone for gold. We move through here, it's going to be really big for gold stocks. So be on the lookout here and make sure to set alerts above these highs. It's going to be an important point. US oil is really interesting. We have low market heads kind of like looking at those levels, but this is basically an ascending channel at this point. So you can see the series of higher highs and the series of higher lows. If they get broken, more importantly, I think 86.50, we're probably in a swing towards the short, and we've long speculated this is where the bears have been. You can go through our last week and a half of videos. We basically talked about this level a lot. And this is because this is the zone where if the bears are going to take control and push down oil, as we saw there was a large transaction in USO, I think it was before, or WTI, we saw a potential here for sellers to regain control. We're looking for new lows that will give us the swing turn and obviously show us something is going wrong in the economy. Let's move over to AAPL. Pretty much as expected, we're back down to that 173, which we speculated on was going to be a buy zone for Apple. It had some nice strength in it. It's had some weakness. This is a pretty good zone for Apple. Do we have a V? Do we have any signs of recovery yet? The answer is quite simply no. It closed near its low, which is not ideal. We know this is super important level above these wicks. So this is going to be a critical point here for Apple. And for buyers, they're going to be looking at this thinking, oh, you know, it's not too bad, even though that's usually a continuation effect. So we'll have to look at the stocks very, very soon. For Tesla, we cautioned against buying the dip here because there was no recovery. And we're at that point. Now we have to say, ooh, daily 200 moving average, pretty critical. Obviously 200, 180, everything down here is starting to get important, but we still have no sign of a buyer anywhere. It's still just drop, 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 drop. It's going into capitulation. People will have been slaughtered on this stock. Hopefully that wasn't you. If we go to the weekly here, you can see, or you're profiting from the downside, you can see that we're back in these important levels. But look at that weekly 200. It's also sitting there. There's a lot going on between about 210 and 180 for support for Tesla. And then while that's a very wide level, this is the zone where we're starting to look for market structure. We'll be patient, we'll react, and probably not predict in this case. US 2000, bad. That's just bad. Daily close below. Obviously, this is a shocking turn of events here for the Russell. So close to looking good, but it wasn't, and that's the difference. Patience, react, don't predict in this case. There were a couple of nice trades towards the long on the Russell last week that would have been profitable actually, but then it started going bad and now it's back down and it's in these lows. Of course, 1650 will be a level to watch and everyone will have their eyes on that, but the Russell 2000 looks really weak on charts. And if we go to the Russell 2000 IWM here, you can see these weekly closes right on the low, usually means there's a little bit more to come and then possibly we'll have a swing high. But yeah, it's not good to see the small caps doing so poorly in this market environment. That's in thanks to part higher for longer yields. That's definitely affecting it. The Australian market started worse than I probably expected. Around here is where I thought there might be a buyer. There are two ways to take trades like this. One, you just buy them and put stops below the low. Well, that's gone. And of course, just chalking it up to a statistical advantage overall. All you're doing is replicating. Other one would be to wait for some type of turn event on the small time frame. That would have saved you in this case, and of course, you would have never been in just yet. What do we see here? Well, we see a market coming down to a pretty big low. It hasn't taken the new one out. Obviously, it's going to be dictated to a lot more by, you would think, the Chinese market and the American market, but not a great weekly close. Right on the lows, pretty negative. I could still see some buyers trying to come through here, but it's going to be tough. German market was a disaster. It just kept falling down and down and down. And actually, people that have been trading the Wyckoff would be very happy. Down here is effectively take profit levels. So if you've been trading shorts, congrats to you. We long speculated this was a Wyckoff short, and we obviously knew this was a critical point for the further shorts, and they've got ahead of it. They've absolutely smashed it out. No buyer was strong enough here. Multiple days of selling pushed us to the lows. And of course, now we find ourselves at a point where you could see buyers regain control somewhere around this next kind of 100 to 200 points. We'll watch the German market when necessary. CQQQ, bad week. Frankly, just bad week. No recovery off any of the stimulus. The market's still freaked out about China. Not really reacting the way we'd want to. We're going to mark out 38 in the future. Look for a move above there. At this stage, it's in a weird zone that's going to be very, very tough to say that looks anything bullish because it certainly doesn't at this stage. Let's move over to the Qs. Now we're trapped, the lows, the highs, basically some kind of wedge here. Could we see buyers here? Well, we've seen them before, so the answer is quite simply yes, we could. But what will we need? The answer is going to be structure. And we'll look at the S&P 500 in just a moment to find the structure. But the Russell was bad. The Qs haven't made a new low, but they've fallen off pretty far, and they've come back to that defended previous area. Here's the NASDAQ futures, just so you can see. Level to mark out is going to be this high here, which is sitting around 14,782. If we get above that, I'm starting to feel a lot more positive about next week, and I think it's a great level to be focused on. For bears, all you guys want is down below 14,400. Now, there could be a good long trade actually just around here, depending on how it reacts to this zone. But if it gets through here with a close, wow, we're probably going lower. Expect the VIX to really spike up. That's the fear of the unknown. The VIX will probably go over 25. Markets will fall, and maybe we'll be looking at even a 4,400 on the S&P. So let's have a look at the S&P. It's back down near the low. The week, which was meant to be, I think it was like 75% of the time, it was usually a bullish week. Well, that stat got slightly broken. And that's the point. It's a stat. If you don't see the charts come with you, then you're not going to get the trade in. Monday was an excellent long day. And then the rest of the week, I guess, has been a pretty good short session. That being said, it was a little bit tough to get into some of those shorts unless you were looking at maybe a key zone or trading options or something like that. We did end up seeing, of course, the markets come down to this zone. They did close on the low, which shows you usually there's a little bit more to come. I wouldn't be surprised at all if it tries to get to a new low and take that out. We know that this 41 kind of 20 zone down here is going to be absolutely critical for markets. This 41.50, 41.20, we've long speculated is a super level for the bulls. And a lot of people will be excited to get it down there because it'll finally hit some forward PEs that we'll look at in this week's video moving forward. There's going to be some key forward PEs. Here are the futures markets. You can see most traded level 41.51. What a zone that's going to be. Very interesting level. I'm actually excited for that one. It's going to be kind of cool if it happens. And we move over here to the smaller chart timeframes. Now, I think this is a critical point. We already talked about 42.60, 42.70. I said that this zone was important last week. You can kind of tell it was because it fell there, and look how it created structure. Now, that structure ended up being a short. But what happens if it gets above that structure? I think that's smiley face for the bulls. So what a level for us to set. We're going to set a little alert above here. I'm actually going to go a little bit higher because I want to see it be broken properly. But these are critical levels next week. If you're a shorter, what are you going to be focused on? I think that zone. Structure was there. We're going to be focused on that zone as well. Some really interesting points. Obviously, the market could rally. If it does, there'll be a short possibility. If it drops further, there's going to be a long possibility. I'm kind of excited for this week ahead. So make sure to subscribe and smash that alert button as we look deeper into the technicals while we get more information. Let's move over to Bitcoin. It managed to get back up to, 30,300 and then sell off again. Yeah, around this zone is where you expect those bears to be. But strong Bitcoin moved right up here. It's at this zone. I wouldn't try to go too far against it. We know the trend is currently bullish because we didn't get that swing trend short. But if bears are going to come in, you're looking in here. I actually think probably around that level. Yeah, 29,260. Maybe if we get a low underneath there, we're looking towards a short on the small time frames. But swing won't be activated until we get underneath structure in this left-hand side, 28K plus. So yeah, Bitcoin still in the strong side. Ethereum has found some regained strength. I don't know. This chart is could be the base. Maybe. We'll see. Bitcoin's really going to control the day. Let's move over to news for the week ahead. And we have quite a lot coming out of Europe. We obviously have all this stuff happening, but it's mostly those earnings we want to be focused on in the US. Then we also have Fed Chair Powell coming out to annoy us again, October 25th. Now, he smashed us last week in terms of the market. So watch that one. That's going to be important. And then we scroll down and we have all this other information, core PCE price index, and of course, revised UOM consumer sentiment Thursday it's Friday. And that's another big bit of news. Of course, core PCE, something the Fed does use. Thanks so much, guys. Thank you for watching. If you enjoyed the special weekend edition, make sure to subscribe, smash that alert button. We'll see you Monday for the open. And of course, for now, stay safe out there, practice risk management. Hopefully we don't get an 87 crash because unless you're on the right side of that, that can get brutal and leverage out accounts.